Hello everyone, welcome to my channel where I talk cryptocurrency and the broader market. Remember, I'm simply a dude on the internet and I can't give financial advice. You need to listen to me at your own risk. Markets are very dangerous, especially cryptocurrency. In today's video, I want to share with you an interesting chart that shows all profits from markets do eventually flow into real estate and the cycle at large. We predicted the bottom of the Bitcoin cycle, but just doing some simple time analysis, and I will link the video in the top right corner of this video now. So if we look at other time analysis, we should get a clearer picture of what to expect in the future. Instead of listening to news pundits and fundamental analysts who is always behind on the cycle and would like us to believe their narratives. Remember, the market is always 6 to 12 months forward looking, and news and mainstream influencers are always behind the curve. This chart, created by Phil Anderson, a real estate expert and the author of The Secret Life of Real Estate and Banking, claims that the real estate cycle is the ultimate driver of the economy and that there is a predictable 18.6-year cycle that repeats over and over. Phil Anderson claims that we have 200 years of data on the real estate cycle, which he says is the ultimate driver of the economy and the stock market. He says that he has studied the patterns and the indicators of the cycle since 1792, and that he can forecast the market movements with certainty using his 18.6-year cycle. So according to Anderson, the real estate cycle consists of four phases: the recovery, the expansion, hypersupply, and recession. Each phase has its own characteristics and indicators that can help us understand where in the cycle we are and what to expect next. The first phase, as we can see here, which lasted from 2011 to 2012, is called the recovery phase. This is the first stage of the cycle after a recession. This is where the economy starts to recover from the previous downturn that we had in the great financial crisis. But the demand for real estate is still low and the supply is quite high. The phase is usually marked by low interest rates, low inflation, and low occupancy rates, with very few people filling their homes, which are up for rentals. This is also the phase where smart investors start to buy properties at bargain prices and anticipating the next phase of the cycle. The expansion phase is the second stage of the cycle where the demand for real estate starts and to increase the supply starts to decrease. This phase is usually marked by rising interest rates, rising inflation, and rising occupancy rates. It sounds a lot like what we had recently after the virus dump in 2019 and the start of 2020. So we can say that we are in this mid-cycle dip right now. So this is also the phase where economy grows, the stock market booms, and the profits from all markets eventually do flow into real estate. This is the phase where most people start to invest in real estate, hoping to ride the wave of the appreciation. The hypersupply phase is the last stage of the cycle, where supply of real estate exceeds the demand and the market becomes quite saturated. This phase is usually marked by high interest rates, high inflation, and high vacancy rates. So we're seeing that we are in fact at the start of this last 7 year before we get to the 4 year downturn. This phase is where smart investors start selling their properties and taking their profits, anticipating the next phase of the cycle. The recession phase, which is the last phase here, which lasts for 4 years, where the demand for real estate plummets and supply is abundant. So there needs to be new houses created, right? Built. This phase is usually marked by low interest rates, low inflation, and low occupancy rates. This is also the phase where the economy contracts, the stock market crashes, and the profits from all markets disappear. This is the phase where most people lose money in real estate as they are focused to sell their properties at a loss or face foreclosure. So this is the run into 2026. You have the world's largest building announced, and the very tall building that is announced closed with zero attendance. This was the Burj Khalifa after the great financial crash. Opened for business in Dubai. So huge commodities boom in this cycle, huge infrastructure spending, an era of easy money. And if we look at the commodity prices currently, after remember, commodities rise with inflation. So we had this massive inflation boom that ended in 2022 in the middle of the year, and it's been downtrending constantly as the Fed has been trying to fight inflation. And now we've been down 30%, and it looks like it's rolling over again. So we need this market, the inflation obviously to bottom and commodities to bottom, and then run higher into this last expansion phase that we expected would end in 2026 and 2025, the end of 25 and the start of 26, and then leading into the crash of the 4-year cycle and a new start of the next cycle. So the previous cycle started in 1996 and ended in 2014. So the cycle peak would have been in 2008 to 2009 during the great financial crisis, and bottoming out into 2014. That was the great moderation cycle, as it was characterized by low volatility, very low inflation, and low interest rates. The cycle had 4 phases: the recovery 1996 into 2022, the expansion 2002 into 2008, and the hyper supply in 2008 to 2010, and then the recession in 2010 to 2014. The cycle was influenced by events such as the dot-com bubble. We had the 9/11 attacks, the Iraqi war, the GFC, the European debt crisis, and the cycle also, as I mentioned previously, of the construction of the world's tallest building, the Burj Khalifa, in finishing in 2010, which marked the cycle peak of the cycle. So where are we now? According to Mr. Anderson, we are currently in the mid-cycle dip, which is the period of slowdown in the real estate market that occurs between the 2 expansion phases. This is the normal part of the cycle, and it's usually followed by a period of acceleration. This won't happen just in the real estate cycle, but we will see it across the board with the S&P, NASDAQ, and cryptocurrencies going up into a very explosive phase. Do listen to Arthur Hayes as well. He's also predicting that massive money printing is coming during the next few years, and an equivalent money printing to what we saw during the virus phase of the market. The chart shows that the first expansion phase that we are currently in was in 2011 and 2012, followed by a mid-cycle slowdown in 2020. We all know what happened then. The second expansion phase is expected to occur in 2026 and 2025, followed by the cyclical peak and then the recovery in 2029 and 2030. So if we can store our dollars, or there would be more opportunities to find a safe haven, or hopefully there are, but I would expect that storing purchasing power in the dollar would, especially if you live outside of the US and in third world countries, the dollar tends to bottom during the top of the crypto cycle and the S&P and the NASDAQ. So the chart shows that, and then obviously if you're interested in buying real estate, getting into the market during 2029, 2030, the chart shows that some of the major events that have influenced the estate cycle, the real estate cycle in the past decade, or the US election campaign, Brexit, and the era of easy money. Additionally, the chart also shows the world's tallest building announced, which shows the signs. So that's a very easy one to look out for. I know that there's a famous watch company, Jacob & Co., building the new largest building in Dubai, so do look out for that. So what does this mean for us as investors? Well, it seems that we should be aware of the real estate cycle and its phases and adjust our strategies accordingly, right? It also means that we should not be afraid of the mid-cycle dip, and this is what we're seeing across the board, and I'm getting it in my YouTube video comments as well. Everybody has been expecting a recession for the last year, maybe even 2 years already, now predicting it to happen the next year. People are still waiting on the sidelines, which is really good for us to see, as many are sitting on the sidelines and missed not only the massive Bitcoin pump, but also the S&P and Nasdaq. So that would just mean they will have to FOMO in once all the bears has been defeated. This is only a temporary setback that will soon be followed by a period of very rapid growth. It also means that we should be prepared for the next recession, which is very inevitable and unfortunately unavoidable. We technically did have a recession with a pullback in the stock market that showed I think it measured 29% or just above 29%. So 27%. Not only that, we did have two negative GDP prints, and that is the definition of a recession. But the current administration in the US, I don't know if you guys remembered this, but they redefined what the definition of recession was, and they were quite hesitant to declare it to be a recession. So we've got the average pull down, and we had two negative GDP quarter prints. So technically we did have a recession according to this statistics. If you want to be fair, it was almost a recession and it never really actually played out, although the news will tell you and your fundamental analysis will tell you that all hope is lost and it's inevitable now. So how would this affect BTC and crypto? So this cycle coincides with the popular 4-year cycle made famous by Bob Lucas, and as well as the halvening cycle, both showing peaks in 2026. And if we just take quickly a look at the home builders ETF, this shows a peak in 2020 as well. And obviously the home builders is a good chart to look at for us, as more homes will get built in this time. And if you listen to the news, it really sounds like no one, the home builders is not supposed to be making any money here now. We were down 40%, but we found the bottom with most of the rest of the market. And we are up 50%. And remember, this is the stock market, right? You don't get 50% returns in such a short time every now and then. This is not a bear market anymore. This is a slight pullback, but we still have higher lows and higher highs on this chart. And in fact, we are slightly below, 11% below the all-time highs. We had a massive bounce off here, making another higher low, which is the definition of a bull market. And there's only a few percentages left before we are in the next all-time highs and price discovery for this chart. We have some price targets over here, which I'm pretty sure will get hit, especially the 4.619, 4.669 at 123 basis points. So this is another chart we can take a look at with the commodities that should rise as the cycle expands and commodities get used and get more expensive, and inflation, as they print more money, this should launch up higher. Here's another chart here showing our winners curse when everybody is starts buying their real estate in this area, and they start believing that they've made a really good investment, and then prices fall, and you start hearing things like prices will never go down again, and you have the cycle peak and the eventual crash. I hope you found this video helpful and informative. If you did, please like the video, share it, and subscribe to my channel for more content like this. And if you do want to learn more about the real estate cycle and how to profit from it, I recommend you check out Phil Anderson. He's got a few YouTube videos, interviews on YouTube. Also check out Jason Pizzino. He covers this cycle quite a lot, and this is where I learned it from. So thank you for watching, and I will see you guys in the next video. Cheers for now, and bye-bye.